Um, I'm Lawrence Refrano, and I'll be moderating the panel. Again, the goal of the panel is to do things very quickly because we only have a half hour here, is to give you an overview of the regulatory environment in the fintech area. And the other thing is to explain to you why you really should care about these regulations and how they impact you. Before we get started, I'll just have everyone briefly tell you who they are, and then we're going to get rolling into a bunch of questions, which I think will be relevant to all of your businesses.
Thanks, Lawrence. Kevin Petrasic. I head up the Financial Institutions Advisory Practice at the law firm White & Case.
Sean Ruff, I'm co-chair of the Fintech program at Morrison & Foerster. Previously at Square for 2 years as their lead payments and financial counsel.
Hi, Ben Saul, partner at White & Case, focusing on bank and non-bank, including fintech representations.
Obria Poindexter, partner at Morrison & Foerster, co-chair Financial Services Practice Group, as well as our co-chair of the FinTech practice.
Yeah, so just to keep things in perspective, you should all realize we had the financial crisis, 2008 through 2010. We had passage of Dodd-Frank. Believe it or not, it was 2,300 pages. It called for the formation of over 400 regulations by 4 or 5 different banking and other regulatory agencies. My last count was there were 22,000 pages of regulations. I don't know if it's humanly possible for me to probably read more than 200. So it does raise a lot of problems, and that's what we're going to talk a little bit about those problems. But before we do, I'd like to pose a question to Andrea about the 5 major legal hurdles or problems that we have in the fintech area right now.
Sure. So there are a number of issues, so I'm just going to focus on some of the key issues that are impacting payments and lending. Let me take those off, and then we can kind of jump in and provide some background for those. But one major issue for a number of fintech companies in the payments and lending space is the state licensing requirements. So a number of states and the money transmission space will require that money transmitters get licensed, and all 50 states. That's certainly a significant undertaking, can cost up to $1 million for this undertaking, and bond requirements and other ongoing compliance requirements. Similarly, with respect to lending, if you're a non-bank lending in a particular state, there are also licensing requirements that are required of lenders in those particular states. And that, again, is a challenge to get licensed and comply with all of these state laws, in addition to the federal laws. And so what we see is that in a number of cases, and this is getting to the second legal challenge, that fintechs will partner often with banks in the lending space to help originate loans. And so one legal challenge that we're going to hear a lot about on a later panel deals with a line of cases that really have created uncertainty in the lending space with respect to non-banks. The first one is Madden. And Madden is a case that really challenges a long-standing preemptive and contractual pillar in the financial services space that basically said that a loan is valid at the time that the loan is made. And those terms that apply to that loan remain valid, notwithstanding the fact that they're later sold or to whom they're sold. So that Madden case has created uncertainty within the lending space. Where are we now? We had the Supreme Court deny hearing that particular case. And we're going to hear later, what does this mean? But we're in a wait-and-see position. with respect to Madden and what it means. In terms of the next step, we're going to hear the Second Circuit is going to rehear the case. And the question is, are they going to understand and listen to the Solicitor General's opinion that suggested that you really have to look at the long-standing pillar of contractual law that says the loan is valid at the time the loan is made, and that the terms that applied at the time the loan was made are the terms that continue to apply. So if the Second Circuit gets that, understands that, notwithstanding whether they, what law they view governing that particular arrangement post-sale, we really shouldn't see an issue. But if the Second Circuit does not agree with that longstanding principle, then I think there's potentially a lot of confusion as to the enforceability or whether there's some kind of delta and the rates that a particular state would allow. And so that's kind of one key issue for lending. Let me go quickly to the third and fourth, and let me just tick those off. Data security is a really significant issue. And it's not just data security, it's really data analytics and the collection of sensitive personal data in an innovative way and the use of it in an innovative way. So on your list of key issues to address, it's understanding the data security elements, but also understanding if you're collecting this information and using it, whether they're fair lending or consumer reporting or other big data issues that you should consider. And I'll just tick off the other two and turn it back over, which are really understanding the regulatory framework is critical, and the compliance that's necessary to have a robust program. And I think there it's, hey, as a fintech company, we fully understand the struggle with respect to, innovation and how the regulations can constrain and impede that ability. I think the key here is understanding first what those regulations are and the requirements and the risk associated with non-compliance, and the consequences. And there are times where you just have to really balance those two. And so we think that's key. And then there are BSA and AML issues that have to be addressed. And if you're a fintech company, you may not be, for purposes of the Bank Secrecy Act, a financial institution, but you may be partnering with someone that is a financial institution, or from a best practices standpoint, you'll need to comply with BSA and AML principles.
Yeah, no, thank you very much. And one thing I want to emphasize here is that for all of you as startups, you can't ignore the regulations, whether they're federal law, like I said, or agency regulations, because there's basically the regulators can do just about anything that they kind of feel like doing, especially the CFPB, which we'll get into a second. But Sean, do you want to make some comments about a little bit more overview comments before we continue?
Sure. This is a true story. They've asked me to kind of do a rundown of the U.S. regulatory system as it pertains to fintech in under 5 minutes. Can't be done. I won't try it. They don't know this yet, right? But I have given thought, though, to what it means, how to boil it down. To me, I mean, in my practice in the industry, as I see clients and kind of what they are experiencing and how they might summarize it, and what might resonate with a group like this. And actually, something kind of stuck in my head yesterday, and I can't get rid of it. And it comes from probably the most famous introductory line in all of literature, which I'm sure somebody will debate me about. But from Charles Dickens, A Tale of Two Cities, it's the best of times and the worst of times. And I think that's it, right? I mean, we're in this contradictory period where we've got this kind of ball of fintech, right? And you've got innovation on one hand, you've got regulation on another, and we really just don't know how to approach it. Certainly, innovators don't know how to approach it. Regulators have a hard time approaching it. And think about it, right? Obria was talking about some of these laws, right, that impact these types of companies. If you're a non-bank financial services provider, that's a fancy way of saying you're not a bank and you provide financial services. That's all the fintech companies we know and love. You better get used to state law 101, right? Because there's lots of laws out there that at some point or another will impact your program, whether it's money transmission, right? If you're moving money, you might need to be licensed in 1 state, 2 states, 50 states. If you're a lender, right? I mean, commercial, consumer, there's some type of framework there that most states will license you under. And it's hard, right? And I think most people would agree that it's just a difficult system for entrepreneurs and innovators to work in. It's not fun, right? And the reason that we have this today is if you think about where all it comes from. We've got state law, right? We talked about some of those money transmitter laws and the lending laws, and that could extend to securities laws and privacy laws and data security laws. We've got federal law. Talked about the BSA. We all know about that one, but it extends beyond that, right? So just a alphabet soup of regulations on the federal side. If you're providing financial services, I can guarantee you, right, that there is one or many of those regulations that apply to you today, right? If you don't know that, come talk to me afterwards, or anybody up here, because they do. And it's a difficult system, to work in. So that's why I say, it's the best of times, it's the worst of times. And maybe what makes it even more worse is right, when you get all those laws together and all those interpretations and all those regulations, and you've got this big pot of soup, right? Not every bite tastes the same, right? It's all different state to state. One customer is treated different than another customer. And we see lots of clients who think they've got it made. They're in one state and they're doing it right, but the next state over, same authorization, same implementation requires a different license. It requires a different regulatory construct. So an interesting time, certainly, to be in this business.
Sean, let me ask you a quick question then. Again, startups don't have a lot of money, right? And you're talking about a very complex legal system, right? State and federal. So how do they, you say, come to me. Well, that sounds nice. But it's, what, $1,000 an hour? So what, I'm not trying to be cute, but sometimes I come across that way. So what do you suggest? I mean, and let me put it in maybe give you a broader question. What do you suggest for the industry overall, the fintech industry? I mean, should it be someone like Plug and Play that supports, a legal center with a central repository of lawyers and central repository of data and so forth that startups can draw on? Training that can be happening with each startup class each year. What do you suggest, seriously?
Well, I mean, at its base, these laws are the same, right? I mean, whether you want to comply or whether they're there. And oftentimes we have people come in and they have these great, wonderful ideas. And as soon as I hear about money coming in and being held and sending back out the other side, I kind of cringe, and because I know what's coming next, right? And that's that money transmission, those damn licenses, right? And they're expensive. I think Obria quoted $1 million. I mean, if you have a law firm do it, right? It's not rocket science. You can do this stuff yourself, but maybe have somebody take a look at your applications. I mean, there are ways to do it on the cheap, to use a legal term. But it's stuff that you have to do. And I think places like Plug and Play are an excellent place for that because it's a repository of those types of issues.
Good. So Kevin, what do you think?
I was going to say, could I jump in there? Slight rebuttal. In all kindness. First of all, that is not me. This is me down there, up there. So this is a very interesting place and time. I agree with Sean's words that this is the best of times and the worst of times for fintech and for regulation. And it's a very interesting dynamic because I think there's always the sense that regulation is burdensome, cumbersome, superfluous, holds back innovation. So I think one of the things on my slight rebuttal is I have the dubious distinction of probably being the person who has served the longest in this room as a federal bank regulator, 21 plus years. Hate to admit that. I start off at a very young age. The thing that is, it's not only on the regulators to try to figure out way to make fintech work. And certainly folks like Plug and Play, and there are plenty of law firms, consulting firms, accounting firms that are doing their part to try to open up the avenues for the development of innovation. And the regulators have their role and whatnot. But there's also, remember, what we're talking about is innovation. So one of the things that you will hear about today is in the context of all of this regulatory overlay that Obrea and Sean just talked about, there are opportunities for innovation in dealing with the regulations themselves. And I think one of the challenges that we have, everybody in this room, is trying to figure out how to navigate that process in terms of trying to figure out ways to be more nimble, be more flexible, be more innovative, and frankly, go to the regulators and talk to the regulators about, hey, have you thought about this or have you thought about that? And the regulators are, at their heart, very competitive folks. They compete with each other. They compete to be the best. They're very proud folks. They take their job very seriously. They not only compete with each other in terms of the regulatory community, they also compete with regulators in other countries. So, for example, we have Project Innovate in the UK. It has not been lost on the US banking regulators that the UK is trying to be a little bit more innovative and proactive in terms of its efforts to welcome fintech into the mainstream of financial services. So I think those are all very important points in the context of the sort of the ongoing development and the debate around fintech. Regulation is not going to go away, and I think the goal is trying to figure out how to make regulation work and actually add value rather than to be just something that you have to deal with to be able to get your product to market or something like that.
Yeah.
And what do you think? Do you think it's a good idea to be proactive with the regulators?
Well, I mean, your mileage may vary. As a general rule, I think that certainly the trend is to be more proactive, not just in the fintech space, but in the financial services space generally. And that's especially true in the consumer finance space where I operate a lot, and the CFPB has been quite aggressive, and lots of folks have been anxious about being proactive. But I see the screw turning a little bit, and folks being a lot more comfortable with the notion of having sit-downs with the regulators. Now, I don't see a lot of clients pursuing, for example, the CFPB's no action letter policy, although in concept I like that idea, and I think those sorts of policy measures are good vehicles to promote that kind of open dialogue. It sort of remains to be seen whether that particular initiative has enough heft to really propel the sort of casual conversations that take place quite routinely into this more formal structure. But generally speaking, yeah, I think it's a good idea. I mean, the question is, when do you come forward? How do you come forward? And I think that goes back to a question that you asked earlier to Sean, which is, okay, emerging fintech companies, what do you do to navigate the morass of state and federal law? Well, I think one thing you do is you think about it soon, right away, at the product development, service development stage. And what I've found is, and I don't think I'm saying anything that's like all that amazing, when you do that, inevitably plans have a way of changing. Usually for the better, at least in terms of the ability to navigate the regulatory regime. I mean, sometimes that means zigging and eliding this slew of state licensing requirements. Other times it means embracing the licensing regimes. It really just depends. But the reason I sort of jump back to that point is that part of that sort of upfront initial dialogue inevitably is thinking about, okay, do we want to try and get comfort from the regulators, whoever they might be, given the product or the service? How do we socialize this concept? And all of those things are are important things to consider, upfront as soon as possible.
So one other quick question.
Let me jump in with one thought on that. So, I mean, I do think approaching the regulators in a proactive fashion is a good idea, but you have to be thoughtful about it and strategic. I mean, you don't go and ask them a question where if they respond one way, it's going to put you out of business, right? I mean, so you have to be thoughtful and strategic about it. But I think the key is establishing some relationship early on is critical, so that you're not in an adversary position with them, and that you're establishing something meaningful. Let them know that, hey, you're kind of thinking about this in kind of broad concepts. Don't look for like a safe harbor from them, but just look to establish a relationship. Let them know what you're thinking about. If they're calling you up for a CID, don't bring in all, you can consult with your outside counsel, but don't bring them to the meeting. Like, make this like a conversation that you're having. So I think you want to be very thoughtful, but key to establish that relationship with the regulators.
Yeah, one point I want to bring up is, and I mentioned the CFPB earlier, the CFPB has broad powers, and if there's anything that touches consumer finance, they have jurisdiction over, which is pretty remarkable. And they also have an unlimited budget. But again, I mean, if people are sitting out here in California, how do they even go about it? I mean, how do they know who to contact? Does everyone have any idea who to contact at the CFPB?
Well,
Dan Kwan, there are people at the CFPB, it's kind of like their business development folks, right, at the CFPB, to kind of give it a term that might resonate. They actively look for folks, right, and want to talk to folks. But to everyone's point, right, it has to be a thoughtful communication, a communication that you want to make. But I found the CFPB to be very willing to speak.
Yeah, no, I agree with Sean. The CFPB is certainly very open to having a dialogue, especially a dialogue with folks in this room in the fintech space. So they have their own sort of version of Project Innovate, Project Catalyst, that have indicated very openly that they want to have those types of dialogues. But again, back to a point that Abrea made a couple moments ago, it's imperative to be thoughtful, to understand exactly what it is you're going in and asking for, and have a plan B in terms of nothing is going to be executed perfectly the first go round. And I think raising the issues at the level that is necessary to make sure that you understand exactly what the interests, the regulatory interests, the consumer protection interests of the CFPB and the other regulators is very important. Among the important things is to take a look at the website and figure out what have they said in the context of whatever it is you're looking at, or analogizing to. They have lots of information that is available with respect to different programs that are in place, and those are very informative and perhaps not at all applicable to whatever it is, the product and service that you're looking at, but certainly plenty of analogies can be drawn in the context of the consumer protection experience.
What about the OCC? Because I was listening earlier this year to some very promising comments from Tom Curry about trying to create, for example, like single-purpose licenses, so that make it and try to solve the multi-state lending problem. So, do you think there's promise in his comments, and have you seen any progress being made in that area? Anyone from the group?
The OCC's actually been very vocal about their interest in sort of moving forward on fintech initiatives, including a fintech charter, type of charter, an uninsured, that would be the virtual equivalent, if you will, of an uninsured bank. So they're taking steps. Again, it's a dynamic process. There are lots of challenges in the context of any of the federal banking regulators to move forward in a space like this. The March 10th, the inaugural event of the FinTech Forum back in DC at GW, Amy Friend, who's the chief counsel at the OCC, sat on a panel with me, and this was the very last panel, and Mark Hochstein, the American banker, editor-in-chief, threw out a question about change. Where do you think things are? My question that I had kind of given to him, thinking that it would be very interesting to get the perspective of everybody. And one of the things, so I said, well, I think things are going to look dramatically different 5 years from now. I thought that was, kind of an easy one. Amy and Jake Farber from R3 actually totally disagreed with me. And I was just like, how can you disagree with me? And so then we came to Professor Lawrence Baxter from Duke University, and I thought, I'm toast. He, of course, is going to agree with those guys. He actually agreed with me. So it is a very dynamic time, and even the perceptions of what is going, what sort of progress is being made. The fact that the OCC would even talk about a fintech charter, believe it or not, is actually fairly significant in and of its own right.
True. No, it really, I was surprised by his comments, actually. So,
I think there's international pressure. I mean, I think there's state pressure, there's economic pressures as you see companies that are kind of looking for a place to live.
Right.
That certainly would be a nice place to
yeah, there'll be
do it in that
congressional
fashion.
pressure too, but I saw a bill that was passed right before recess, and it said something along the lines that, fintech should not have an advantage over banks, which told me that the fintech companies should be regulated equally as banks are regulated. So that raises another question. Is there a level playing field here? Do the banks have an advantage? Do they have an advantage because they have the relationships in Washington already? And also have the lobbying relationships?
I think there's a bit of a misnomer there, right? That fintech companies are just completely unregulated, kind of running wild. I mean, if you're a money transmitter, we've talked about those folks. You're licensed and regulated in whatever state that you're operating in. If you're a lender at the state level and you're not operating through a bank, right? You're lending yourself. There's, lending regulations and a compliance framework that's been built and used for years and years and years. I think you could pick and choose areas, maybe data security and others, where there is a bit more of an overlay from a federal or prudential regulator, right? That you might not get from a state examining for money transmission. So I reject the notion that there's no regulation on the fintech side, but I do agree. I think there's you could pick and choose those areas where there is a stronger impetus and a stronger push from federal regulators in terms of data security, and that's what typically comes up.
Well, in fact, with fintech in many areas, right, if they're lending in a particular state, they're regulated, they have more regulators than a federal chartered bank would have necessarily, right? So, I mean, there's actually, in some cases, more regulation of your fintech companies. But, I think this is, kind of, it's difficult for one particular agency in the U.S. to address fintech and provide some kind of safe harbor that's really meaningful or helpful, because there's so many agencies within the U.S. that govern certain, consumer protection, the CFPB, Treasury, we've got BSA and money laundering issues, the states in terms of, consumer protection on a different level. So that it's hard for, it's not very meaningful to me if you have one agency like the OCC that just kind of provides some, ability and maybe flexibility. That's not going to help you with respect to states, or may not help you with respect to other agencies. And I think unlike what we hear in the UK with the FCA and the regulatory sandbox, we really just don't have a regulatory framework that's similar to provide that kind of safe harbor that allows for the flexibility that I think is needed in some cases.
Yeah, I think that's right. Go ahead.
I was going to say, I think it's also important to understand that products and services that are provided by fintech firms are obviously extremely varied in the context. So we're not just talking about marketplace lending or just lending or whatnot. So many of the products and services that are being developed for the fintech sector or whatever, however you want to refer to it, are really products and services that are being provided to insured depository institutions and other lenders that are regulated. So the way that the federal banking laws work is that if you're providing a service to a depository institution, a regulated insured depository institution, you're subject to the same rules and requirements as the third-party service provider, as the bank itself is subject to. The other thing that's important to remember in the context, sort of in the international framework, is there's a tremendous amount of activity in the cross-border space, and you have things such as the EU's General Data Protection Regulation that becomes effective in May of 2018 that is rapidly being examined by all sorts of different regulators, all sorts of different institutions because of the regulators' attention to this. And there are certainly plenty of folks that will find themselves, deep into 2017, wholly unaware that the GDPR is about ready to go into effect, and they're not prepared to implement it. And that overlays, there's no lines of demarcation in terms of insured depository institutions or not. It is a regime that applies to all institutions that have any sort of connection with respect to the EU, including carrying information on, or storing information on EU citizens or anything like that. So it's very broad in its impact.
Ben, in terms of the years that you've been practicing or covering the fintech area, is there any one particular thing that stands out in your mind as something that blew up that was just like very unfortunate because of just this, something came out of the blue? Is that a fair question to ask you? What was your oops moment? How's that sound?
Pardon me?
What was your oops moment?
That's even better, right?
I've, of course, never had an oops moment. I think that's a tough question. I would say, in the fintech space, I don't think there's been a huge, oops moment. I mean, if I'm being totally honest, right? I mean, the sort of subsector that's been taking it on the chin, recently, is P2P and
Right.
and marketplace, but
even there, that wasn't an oops moment. That's the way it's been.
Yeah, right.
The way it's not, right? I think that's one of the important things about this fintech space. It is new, and there oftentimes aren't actual real answers, and we operate in kind of that risk area.
Yes.
But I think that's, if you just look at that segment, it hits on a lot of things, right? The fractured regulatory system in the U.S., has sort of made that, it made the circumstances around that, space, seem more dire, and the whole situation, more complex. The existence of a limited purpose charter, might be an attractive thing because it, would provide another alternative to the, sort of, bank partner or go it alone, dichotomy. From a policy perspective, and I'm not saying that this is something I agree with, but from a sort of regulatory, sort of government policy perspective, having a full scope, regulator, might address some of the, the sort of credit risk, systemic risk concerns, which, I mean, I'm not expressing a view on that, but, in any event, it's not really an oops moment, but
No, it was a little bit of a fair question, but the oops question should actually be out to the audience when they.
Actually, if I could jump in, one interesting oops moment for the industry sort of writ large, not any of us, is the Madden decision that Obreya talked about a little while ago. Madden decision, actually, the Second Circuit, probably one of the most powerful and highly regarded circuits of any federal circuit, essentially took long-standing precedent, a 1880 case, the Nichols case that talked about assignability and how the assignor stands in the assignee stands in the shoes of the assignor, and then took the concept of federal preemption, well settled, very well settled. Nobody even gave it a second thought. Came to the Second Circuit basically said, there's no federal preemption here. So for the marketplace lending industry, everybody was like, are you kidding me? Like, what the heck happened there? And we were all stunned by that. So what will happen in a very dynamic space such as the fintech space is things will occur in the context of legal developments that nobody will see coming because some entity decides to take jurisdiction or some court comes out with a decision that was rightly or wrongly decided in a way that nobody anticipated. And I think that's one of the very important dynamic aspects of the fintech space is for folks to be nimble and flexible enough to be able to deal with those issues.
And I think that's the last good point, which is, again, we haven't talked about the court system, but again, there are going to be regulations which are going to be litigated. So we do have the federal courts, and then we also have the appeal process, right? So sometimes it's going to be a long, tedious process to figure out where we all stand in the industry. Listen, thank you very much for listening. I hope you got something out of this, and we're going to turn it over to the next panel, right?
Yep.